right around the world. Thanks a lot for joining me on this Tuesday afternoon market recap. A very interesting signal taking place on the SP 500. This is the first chart that we are going to look at. We do have roughly 15 minutes left of trade in today's session. However, what we do have is that of an outside day engulfing candlestick. This is a very strong, a very bullish candlestick, and it does open the door for this market to potentially gallop all the way on up and close this open window up here at 2,852. If you see follow through on the SP 500, in particular during Wednesday's session, if we start to really push above the highs, the intraday pushes of today's high being Tuesday, we could see the SP 500 very easily come Friday be closing all the way up here at 2,852. As I zoom out and show you this picture, really this has been our target since we were left with essentially the waterfall bottom over here when we began to come back down and retouch this support area on a number of occasions. The reason for that is because we do have a definitive and a pronounced open window. That open window has largely been really our narrative on the market moving forward. We have seen, of course, the market move into sideways, sort of choppy market environments, especially 2 weeks ago on the Dow Jones Industrial Average, as it began to actually break below this sort of intermediate bullish trend line that you can see off from the SP 500 here in the month of April and also May. However, the Dow Jones Industrial Average has pushed back above that respective intermediate trend line, and again, we are starting to see these markets move back into synchronicity with each other. So really the narrative at the moment, or at least the sentiment of the market as at the close, or very close to the close on Tuesday, is that of a bullish environment. We have in fact taken advantage of this above 2,767 most recently on the SP 500. As you can see, the intra-session movement at the moment, or at least its current price, is 2,812. So some pretty decent trades, or at least positions there, open positions I should say, on the SPY. Whether or not you're trading those call options, they are working out fantastically well. But the same is true largely for the Dow Jones Industrial Average. We're pushing up above this 24,865 area. What we haven't done, however, unlike the S&P 500, is definitively broken above that June swing high. So really the final piece of confirmation is going to be the Dow Jones Industrial Average actually breaking above 25,500. However, we do have a vested interest in the SPY position. And what we spoke about over the weekend is that, say for instance, the S&P 500 rallies up and it closes its respective window that I just spoke about. Depending on where the Dow Jones Industrial Average is priced, there may be a little bit of arbitrage opportunity for us to jump in and take some additional DIA positions, depending on liquidity on the option contracts, to take advantage of the Dow Jones Industrial Average rallying all the way back on up and closing 26,435. When we get up to this area, this is where essentially we are going to turn once again neutral on the markets. We're not going to have really an overwhelming bias one direction or another, and we're simply just going to allow the market to dictate to us in terms of price action whether or not it wants to break out and continue the macro bullish theme that we have been in since 2009, or potentially we may see another wave rotation, another oscillation from this resistance area to take us all the way on back down. Who knows, maybe potentially all the way to 25,000, more or less where we currently are as at this Tuesday. However, once again, just to conclude, the markets are bullish and you should have at least bullish orientated trades when it comes to individual stocks. There's no point trading against the trend direction. The trend direction is very strong, it's very healthy, it's robust, it is continuing to move to the upside. And even as I transition into the NASDAQ, we did see a little bit of selling pressure, largely due to Netflix earnings that was announced yesterday. I will update that in due course, but you can see a little bit of a gap down here on the NASDAQ. However, immediately that was bought, and we are sort of essentially setting up that of a continuational pattern as well. We've got a long day Morobozu candlestick. This is on Thursday last week. We've had two sort of inside day candlesticks, and then come today being Tuesday, we have seen another engulfing candlestick. This opens the door for the NASDAQ to rally, and we're also seeing a little bit of agreement when it comes to Amazon continuing above its breakout point, most recently 1,819. We've got Apple, which is firming up as well. We did see a little bit of a gap down today, back down more or less to our entry point at 188.91, but it is firming up and turning bullish. We are closing at 191.68. But most importantly today, and what I'll be doing for the remainder of the week, is updating you when it comes to some of these stocks which are reporting their earnings. We do find ourselves in the midst of earnings season, and it is going to influence at least the majority of our top 12 individual trade list, not just this week, but the week following as well. But as you can see here, that Netflix itself, it actually opened up below $350 per share. We've had a slightly sort of hesitant outlook on Netflix after this particular pattern just here, and a number of engulfing candles since. Of course, the rally which failed to produce that of a higher swing low, and what appears to be that of a gap retest which has essentially failed, hence the rollover and the selling which has taken place after earnings. However, what has happened during today's session is that the candlestick itself is white. And what this is telling us is that, once again, people are willing, they're sort of somewhat indiscriminate when it comes to speculation at the moment. And really that's sort of the theme of the market. People are still willing to speculate. They're still willing to jump in and buy the dip. They're still willing to hold support. And as such, the markets, along with these individual stocks, continue to be resilient. So again, what we have spoken about is to be somewhat defensive, especially over the past number of weeks. However, what we haven't done is jumped into a bunch of short positions. We've allowed the market to essentially find its resting level, and then we've been under the assumption that we are going to see rising prices, especially when it comes to the market analysis on the industrial average and the SP500. This is a process. The process takes a little bit of time, especially when you come to turning points on individual stocks and also markets. Not that I am screaming out at the moment that there is going to be a market turn. It's too early to say. Of course, as I just said before, we are going to look at this market very neutrally once it comes back on up and closes those open windows. But Netflix itself has got a very bullish candlestick after a knee-jerk reaction to the downside. So mixed signals at the moment, very bearish sort of patterns that were showing up towards the end of June. That is somewhat being vindicated into earnings. However, today, being the earnings candlestick reversal, we do have that of a long day engulfing candle. It's not so much an engulfing candle, it is just a long day Mobozu, very healthy, resilient candlestick. And it does indicate that we are going to come all the way back on up and retest maybe 420. Who knows, maybe potentially by the end of the week. Now, also what I can do, having said that, and now that we do have the structure of this earnings candlestick, we can simply put in a short trade here at 340.08 to the downside. And if this happens, I assume that it is going to be very close to below the rising 100. As you can see, it's just a little bit above it. I'm going to tweak it down a little bit, 337. And also what you need to be doing is paying attention to the rising exponential moving averages. A long distance here, but really you should think about this little gap filling and then what happens in this sort of trading vicinity or this location on the chart here. It'll be interesting to see whether or not we rally and what happens if we overshoot the gap and potentially set up reversal signals like we did towards the end of June over here. This is going to be a work in progress, but at the moment, I'd simply be leaving it alone. I like these candlesticks. I like the gap down, and then of course white candlesticks. I also like gap ups followed by dark candlesticks. It gives us a really definitive area to trade long or short once that candlestick is established, and that's exactly what we have on Netflix at the moment. Now, to continue with some other individual stock analysis, Tesla is firming up. At the same time, we don't have a real trade on that. IBM is the next stock, I believe, in our list to report earnings, so we don't have an open position in IBM. And interestingly enough, we still have this open window that we haven't closed since its last earnings report as well. So since really its past earnings in the month of April, we've largely just been, it has been still sort of a bearish continuation, but at the same time, support is still firming up. So I wouldn't write off IBM at this particular moment, although it has looked a little bit shaky in recent time. We've got Google again trying to break out above 1,204. This somewhat sort of syncs quite nicely with Amazon and also the NASDAQ, which is still holding up very close to or closing at new all-time highs as well. So we're seeing a little bit of strength once again come back into the market leaders. We have CVX. We haven't touched this. This has largely been moving sideways, and I still expect the same. If not, we may see a little reversal. Not really so much of sort of a tradable reversal. It's something that I'm not gravitating towards, simply just letting it be until earnings. We've got COP, which is still struggling to break above resistance. We've spoken about potentially a channel consolidation, if not that of a symmetrical triangle. At the same time, though, we've said just leave it alone, and as you can see, it's simply going absolutely nowhere. So we haven't allocated any capital into any of these stocks that are largely moving sideways. The same is true for Caterpillar. You can see it's just lingering around this 140 to 136 handle, not really doing a whole lot. So we do have earnings towards the end of July. If we don't see any real commitment, this is something that we're going to have to simply leave until we get that earnings announcement and we see how the traders react to that moving forward. We have Baidu as well, which is holding up above its near its respective resistance area. We haven't definitively broken above any of these sort of resistance areas. So we're just sort of more or less being patient on that particular stock as well. The same with Boeing Airlines. A lot of these stocks aren't oscillating all the way down to support, and at the same time when they thrust, they're not taking out the all-time highs at the moment or their respective resistance areas. So we find ourselves largely no man's land, and I'd say intelligently we're really being disciplined in our approach to allocating capital into whether or not it is individual trades or even market analysis or actually market indices at the moment as well. So you can see here Amazon breaking above 1819. Interesting parallel over the weekend, psychological round numbers. Generally, that's where stocks navigate towards, especially in trends. So, Amazon, there's a pretty decent price target up to $2,000 per share. And also with Apple based on the 188 entry, we've got a pretty defined target just shy of 200. It's coming in at 199.28. It'd be interesting if we actually rally strongly this week prior to earnings, and we can close that out at 198 or 199 prior to earnings, which is scheduled at the moment towards the end of July. So that's a little bit of a market update at the moment. Also, very quickly, the US dollar that I'll bring up for you, it is still trying to strengthen. It is still trying to firm up. My line in the sand for the US dollar is that if we do break above this resistance swing high at 95.50, that more or less should negate the potential of that bearish rollover that we have here at 93.14. So at the moment, we don't have any definitive sort of answers at the moment with the US dollar, but it's also going to play into our GLD and SLV analysis if we see continued strength in the US dollar at this time. 95.50, line in the sand, write it down. So that's going to do us as at this Tuesday market overview. Send in any questions that you may have via email at success@pivotpoint-trading.com. Until tomorrow, I wish you a pleasant evening on Tuesday. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.